What makes a good property investment? Or even what makes a good suburb for that matter? In today's video, I'm going to take you through 4 tips for finding the best location for you to buy your home or future investment property. I'm going to take you through the exact tools and a couple of websites I use to filter through and do a bit more research to work out if you're choosing a good suburb or a limit. All right, let's jump right in. What makes a good suburb? This is a question I get asked pretty frequently, and it's pretty hard because it's like, well, where are you looking at buying? What area is it in? Are you going in Uluru or Brisbane or Melbourne or Sydney, or where are you looking at buying your property? And what are you looking at doing with it? But in this video, I wanted to break down a couple of tools and a couple of questions you should be asking yourself before you buy to help you maximize how much return you might get from that property in the future. All right, so number one is looking at the depth of market in that particular suburb. In other words, you want to look at all the sales that have happened in the past year, where you're looking at buying, and specifically the types of properties. So let me show you what that looks like. If you jump onto Domain, you can have a look and actually break down the sales that have happened in the last 12 months and what types of properties that it happened with. So for example, this is for Paddington, where our office is here in Brisbane. And by far the most sales have happened in 3-bedroom properties. Well, and for houses. So you can see in Paddington, if you're looking at buying a house, you can be pretty confident to know there's going to be a reasonable amount of buyers out there at the back end because there's a bunch of properties selling in that band. So there's going to be a reasonably good market for resale in the future. But if you're looking at, say, 1-bedroom units in Paddington, out of 180 sales, there's only 4 that have happened in the last 12 months. So potentially there's not as much demand for that property in the future, and there might not be as much growth because people aren't really coming to Paddington to buy a 1-bedroom apartment. Another really good tool is this one by SQM Research to get a bit of a gauge of what's happened historically in the types of properties that you're looking at and might give you an indication of the future. Again, it breaks down from units and houses to get a sense of, well, what's happened over time. Units in Paddington seem pretty flat when you compare it to houses that are kind of trending up in the last little while. So a bit of an indication on the depth of market there. The second thing you want to look at is owner-occupied resident mix. This is looking at how many people are actually living in the home they have a mortgage on versus how many people own the properties in that suburb are just pure investors. Now, why would you want more owner-occupied owners in your suburb compared to investors? Well, it gives you a bigger market. There's twice as many owner-occupied property owners in Australia than there are investors. So it gives you twice the potential market in the future when you sell your property. A quick way to check this is on this website, Property Value. I'll include it in the notes below, and it actually gives you a mix in the suburb of renting versus people that actually have a mortgage on the property or own it outright. So like in Paddington, as you can see here, it's kind of 50-50, which means that, well, it's actually a bit more, which looking at that means that when you go and sell, there's going to be more owner-occupied buyers out there, which gives you a bit more options and more people, more competition and more demand than if it was an investor. I guess comparing to another market that's skewed a bit the other way and is more rental focused is, say, like Brisbane City, Brisbane CBD. There's lots of apartments, there's probably more investors there. And as you can see there, instead of it being sort of 50-50 or it's skewed a bit the other way in Paddington, in Brisbane CBD, there's almost 60% of properties are owned by investors. So it just means that you might have more of a limited market when you go and sell that property, and you might not get the same amount of growth as, say, Paddington or a suburb where there's more owner-occupiers or people that live there. The other thing you can check out is population growth. You can do this on the census website. So you can actually see in the 2011 census, there were 7,987 people living in Paddington. What you want to see is a bit of growth in the suburb, because if a suburb size is shrinking, that means people might be moving away, there might not be jobs, there could be other issues there. Then fast forwarding to the 2016 census, Paddington's suburb population's gone up to 8,500. So there's a bit of growth there, which again just shows there's more people, more demand, more buyers, and potentially more options when you go and sell your property. The third tip in what makes a good property investment is area upside. An area with high amenity usually will have more demand because if you're people moving in there or if you've got renters, the best things that add value to property are things like transport initiatives, railway stations, offices. Is just more investment. Yeah, a good website that we've looked at in the past to help with you work out if there's good amenity is WalkScore. You can literally just put in the address of the property you're looking at. I've gone through this in other videos. It'll give you a breakdown of if there's cafes, amenities, schools, tells you the public transport, and gives you a bit of a snapshot on what's renting in there. So it's just a good one to get a sense of if there's more amenity, you can have more demand, people want to live there because then they have to travel, and obviously makes it a better investment. The last tip is rental appeal. So if, for example, back to that 1-bedroom apartment in Paddington, you need to think about who's going to live there. So based on the demographics of a suburb, back to Property Value website, a 1-bedroom apartment realistically could have, one person, maybe a couple comfortably. But if you look at the Paddington suburb mix, half of the people are couples with children. There's only a few single parents, and maybe there's a couple of couples without children. So it's just thinking about who your property is going to appeal to. So in Paddington, for example, if you've got a 1-bedroom apartment, really you're going to lose half the market, because half the market is couples with children, there's a bit of single parents and other. Compared to Brisbane CBD, which the child's couples is 65%. So it might make more sense to buy a 1-bedroom apartment in Brisbane CBD because you're going to have just couples without having to worry about kids, and you've got a bigger market, potentially more demand there. But really the point of that is to think about who will live there and why. If it's a 3-bedroom house, yeah, maybe it's going to be a family with 2 kids, they can fit in there, all makes sense. Does that fit in with that suburb demographics? If not, who will live there and why is a good question to ask yourself. So what does make a good property investment? It's definitely not those websites that are going out there telling you all the forecasting, and if they knew, they would be buying those suburbs. It's a matter of doing some research, thinking about who's going to live there, is it livable, and trying to appeal to that owner-occupied demographic, because that's the biggest part of the market in Australia. That's it for today, guys. Hope you enjoyed the video. If you got any comments, leave one below. Otherwise, see you next time.